joins us live now from Chicago. Larry, hello to you. Certainly it was weight being seen in the energy space in that overnight session. Oil prices continuing to weigh not just in the US, but globally.
Yeah, exactly. Now it's entering official bear market, down 20% from its high. I hate to sound like a broken record, but I still believe that this is all technical. I mean, there's no new news coming out. The only news we hear is about OPEC. Will OPEC and Russia, will that splinter apart? Is the U.S. becoming more efficient at producing shale at a reduced cost, et cetera, et cetera? And so I do believe this is all very technical. It definitely has weighed on inflation expectations. We've seen that with worldwide data, especially in the last 3 months. And here in the U.S., you can see that in the yield curve, which continues to flatten. The 2 years remaining near its high, where the 10-year yield continues to fall.
So in terms of what we're seeing then in terms of longer term, I mean, we're also looking to iron ore, many of the commodity moves within here. And we do seem to have this deviation in terms of iron ore price action against gold moving lower, oil prices moving lower also. How are you stock picking within this?
Well, you know, I'm very worried about it all. I'm hoping this is not a repeat of what we saw 2 years ago. I don't think it is, especially because now you're seeing all the analysts come out with reduced forecasts down to $45, $48, et cetera. That's usually a sure sign of a bear trap, and we'll probably snap back. You know, there's a huge divergence between steel rebarb and iron ore. Everybody's talking about it. The fundamentals aren't as weak as projected, although we have to realize there's a huge supply glut. So this is really more about supply, iron ore or oil. It's not a demand function. It's more about supply. So I think it just needs to wash out, and that will be okay.
Just in terms of how this is impacting some of the broader elements that you're seeing, of course, we look to Qatar, we look to the Gulf and some of the geopolitical issues taking place here. We do have what is a broader bull run in the US. I mean, how are you positioning yourself globally and diversifying your portfolio when it comes to your global allocation?
Yeah, you know, so not much has changed with me. I mean, I'm still like neutral to below weight in the U.S. I think we're closer to the end of the business cycle than the beginning. I still really like European equities, especially in the financial sector and also the emerging markets. That still has not become a consensus trade. I do like, in particular, China. I really like Australia, especially coupled with the currency. And from that point, nothing really has changed other than going at weight Japanese equities, which happened about 3 weeks ago.
On that note, Larry Shover, unfortunately, we will need to leave it there. Great to get your insights into the oil space. Of course, we continue to see that rout weighing on global equities. Certainly plenty still to come. Larry, thank you.
Thank you.